Hey everybody, Rob Maurer here, and today we are talking about downgrades for Tesla stock from Goldman Sachs and Morgan Stanley, some new features for Tesla Autopilot waiting in the wings, some news on Solar Roof, as well as the Ford electric F-150. Tesla stock on the day today did finish down 3.9%, so a couple of rough days here after crossing $1,000 per share. I've never seen Tesla investors so disappointed with a $935 close, but it is what it is. That was on a couple downgrades today from Goldman Sachs and Morgan Stanley, likely contributing to Tesla's underperformance versus the Nasdaq, which finished up 1%. Neither downgrade was significant from a price target change perspective. Morgan Stanley changed their target from $680 to $650, and Goldman Sachs actually increased, despite the rating downgrade, from $925 per share to $950. I want to spend a little bit more time on the Morgan Stanley note, but Goldman Sachs downgraded to neutral primarily on valuation concerns, saying that, quote, "We'd look to become more positive on Tesla stock again if we had more confidence in the near to intermediate term trajectory and fundamentals, or if valuation became more attractive," end quote. Goldman Sachs is forecasting about 425,000 deliveries for Tesla in 2020, which is a little bit higher than the street consensus, which last time I saw was right around 420,000. Morgan Stanley has downgraded Tesla from equal weight to underweight, and again lowered their price target from $680 to $650. They're projecting 419,000 deliveries for 2020. Of course, a few weeks back, I walked through Tesla's path for beating guidance this year, which was more than 500,000 vehicles. I was pretty confident in that at that time, and I've only grown more confident since. Adam Jonas of Morgan Stanley's main reason for lowering his price target is short-term risk, noting demand and pricing. He mentioned 3 points in that specifically. First, price cuts in the US and China. We did a full episode on that, but I do think that that could be a sign of Tesla needing to boost demand temporarily on some vehicles in some regions. I don't think it is indicative of an overall demand issue for Tesla, and certainly not indicative of a longer-term issue with demand. The second point he made on demand and pricing was the shortened delivery times on the website specifically for Model Y. The estimated delivery times there have come down from 8 to 12 weeks to 4 to 8 weeks now. And Jonas also mentions concerns because Tesla has added the Model Y to the referral program. Let me just address anything here by saying it's pretty silly to have concerns about demand for the Model Y at this point of time, regardless of what changes happen on Tesla's website. Tesla delivers 100,000 vehicles per quarter. They've delivered in total for the Model Y, which they expect for good reason to be their best-selling vehicle, maybe 10,000 at this point in time? Having demand concerns about that is pretty nonsensical, in my opinion. But to address those points specifically, Tesla's estimated delivery times on their website have historically been pretty inaccurate. I'm sure some customers today could order a Model Y and they could get it in 4 to 8 weeks, but I'm sure other customers would have to wait beyond that time period. Again, I think this comes down to regionality. I think Tesla just matches the inventory that they have produced and available in a given region with the demand in that individual region. And region in this case could mean even as low as the state level. So personally, I don't have any concerns there, and the same thought process applies to the referral program as well. That could be something as simple as someone at Tesla noticing that, oh hey, we forgot to add the Model Y to the referral program. Maybe we should go ahead and do that now that production is growing. Elon has actually answered this question in the past on Twitter before. Back in March, somebody asked when it would be added to the referral program. Elon said, quote, "Once production has exceeded pre-orders," end quote. So even there, Elon isn't saying that they'll add it to the referral program once demand exceeds production. He's saying when production exceeds pre-orders. Pre-orders and demand are very different things, and we've talked a lot about how Tesla anti-sold the Model Y. So if we're going to take anything away from that, it should be good news for production rather than bad news for demand. Anyway, those are Jonas's 3 concerns on demand and pricing for short-term risk. He says that short-term risk represents the entire change to his price target, and then he cites a couple long-term risks, including US-China relations, which Jonas says a deterioration of would probably impact Tesla more significantly than other stocks. And second, tech competition, specifically mentioning Amazon and their interest in the space. What I think is most interesting about this note, though, is the long-term forecast. I've talked about this a lot with street consensus estimates, but Jonas here says, quote, "Our $650 price target is predicated on Tesla reaching 2.3 million units of volume by 2030, or just over 10% of the global EV market on Morgan Stanley estimates at 16.5% EBITDA margins," end quote. This is why I wanted this question to get asked on the last conference call, but it does not seem to be having an impact yet. Remember, Elon said that less than 40% compound annual growth rate would shock him. That would be 15 million units in 2030. Jonas is forecasting at 15% of that level. Their bull case has Tesla at 4 million vehicles in 2030. They even have a sensitivity matrix that is supposed to show a variety of different outcomes for sort of the terminal case for Tesla, and this is for 2030. On the x-axis, they have vehicle deliveries, and on the y-axis, they have EBITDA margins. The margins range from 12 to 19%, and then the vehicle deliveries range from 500,000 vehicles all the way up to 5 million vehicles. And then each of those intersections carries a different price target. So that gives the matrix of price targets for different cases. But think about that. Even in the best case scenario that they have in their sensitivity matrix, they have 5 million vehicles in 2030, still missing Elon's very shocked case by 2/3. I mean, at least put it in the table. The discounted price targets for today from that table, by the way, at 5 million vehicles for 2030, range from $987 per share to $1,563. Morgan Stanley, by the way, for 2022, full year 2022 deliveries is estimating 835,000. Tesla, by the end of this year, probably before the end of this year, will have that much production capacity just from Fremont and Shanghai combined. These types of forecasts are just completely out of line with Tesla's ambition. But hey, if Morgan Stanley and Goldman Sachs both drop notes on the exact same day downgrading Tesla stock, it sure does present a nice buying opportunity, and maybe that's the point. Alright, next up today we have some potentially exciting news on Autopilot. Green on Twitter at GreenTheOnly says, quote, coming soon to a Tesla near you. Speed limit recognition worldwide with 3D rendered signs and roundabout support, end quote. If you're unfamiliar, Green does a lot of hacking and digging into Tesla's firmware, so he's seeing these speed limit sign renders show up in the code somewhere. Doesn't mean it'll happen immediately, but it's nice to see those things pop up. Kind of fun timing on the roundabout news as well, as this week, YouTuber Tesla Driver was able to capture his Tesla using Autopilot navigating through a roundabout. While it was interesting, the driver did still have to initiate some lane changes during the maneuvering. Next today is some news on Solar Roof. Electrek yesterday posted an article saying, quote, Tesla starts canceling solar roof orders after years of taking deposits, end quote. A headline that Tesla Q was pretty excited about, but this is only occurring in some specific locations. Electrek heard from some readers in Oregon and Michigan, and Tesla sent them an email saying, quote, upon further review, your home is not located within our currently planned service territory. The driving distance from our closest warehouse would make it difficult for us to provide you the high-quality service that our customers deserve. For this reason, we will not be able to proceed with your project, end quote. So definitely disappointing for those orderers who had put down $1,000 for a deposit with Tesla. They'll of course get refunded for that money, but you lose some time value on that. And of course you may have had other plans for your roof, but this doesn't mean that the solar roof as a project is canceled or anything like that. In fact, on Tesla's website right now, they have more than 100 job openings for solar roof related positions. I think the email there was a bit confusing too. I mean, how much service is a roof going to need? And Tesla said that the distance from the warehouse that they have the parts located in wouldn't allow for good service. My take on that is it wouldn't allow for a good installation service. I think Tesla needs to keep the cost down on this, and I'm sure margins initially are going to be extremely small. And from what I've read about the installations, the service teams are bringing new parts every day, so they aren't staying on location every day for the installs. That sort of a logistical process doesn't work if you have a multiple hour drive to and from the site every day. Lastly today is a quick update from Ford on their electric version of the F-150 that they have planned. Previously they had said that this would be coming out before 2022. We now have a revised timeline from Ford's chief operating officer. He said in an interview with CNBC on Wednesday that this would be shipping in mid-2022. So already at least a 6-month delay on that project. I wouldn't be at all surprised if that is delayed again. In fact, I would be surprised if it's not. We've talked about the macro environment causing delays like this and canceling of projects. And of course, previously Ford, with their Lincoln brand, canceled their electric vehicle collaboration plan with Rivian. So further delays here from Ford. And of course, with the F-150, this is a big one. The further delayed that is, the more difficult it's going to be for them to compete. With the Cybertruck, though, I'm sure they feel the opposite, because I'm sure they have no way to compete with the specs that Tesla has announced right now. So that is it for today. As always, thank you for listening. Don't forget to subscribe and sign up for notifications. Make sure you're following me on Twitter at Tesla Podcast, and I'll see you again on Monday for the June 15th episode of Tesla Daily. Thank you.